So today we'll be talking about debits, credits, and natural account balances. And this is important because it's really the fundamental basis of double entry bookkeeping. And it's something that new students have a hard time with, and then it's something that I've often seen with new accountants and bookkeepers when it comes to nonprofits, because of some of the things that they want to try to do with net assets. So let's get into it. So what are debits and credits? A debit is generally thought of as a positive balance, and this is because when it's in a single column, it's represented by a positive number. It's going to be on the left side of a ledger or a journal entry, and it will represent a positive balance in assets and expenses. Credits, on the other hand, are often thought of as a negative number, and this is because in a single column they would generally be represented as a negative number, and they're going to be on the right side of the ledger in a double entry system and in a journal entry. Generally, these are going to represent natural balances for liabilities, revenue, and net assets. So natural account balances are generally what you would expect an account type to be. So assets are generally positive or debit balance. Liabilities and net assets are generally negative or a credit balance, as are revenues, which are generally a negative or credit balance, and expenses are generally positive or a debit balance. And when I say negative and positive, remember, this is when we're looking at it in a single column, just natural state, not formatted for financial statements. So I think the best way to look at these is through some journal entries. So first, we have an entry where we need to record a pledge receivable. So what we do is we will debit the pledge receivable because that is an asset, so that increases the asset. And then we're going to credit contributions. And this is the revenue. So this credit increases the revenue. Now, one thing I want to point out on this next journal entry is something that I often see that people will get wrong. When I was an auditor, I would see this oftentimes with bookkeepers that were very unfamiliar with nonprofits, and they had just a few clients that were nonprofits, which is why I suggest getting a bookkeeper that actually has experience with nonprofits, not just a random bookkeeper. So in this entry, we receive cash, but the cash is restricted with a donor restriction. So what we do is we increase the asset with a debit to cash, and then we increase the contributions with donor restrictions revenue with a credit, which increases that revenue. Now, what I've often seen here is a couple weird things. Some people may completely skip recognizing the revenue. They actually have debited cash, and then they go ahead and they credit net assets with donor restrictions. So you've never recognized the cash, and then you've thrown off your opening equity. And it's not going to tie when you go back to try to tie to the prior year financial statements before closing the books. Now, we'll talk about this a little bit later, but what you should be doing is probably waiting until the end of the close. You know, whether you close your books monthly or quarterly, And that's when you make an adjustment to net assets. And your adjustment simply needs to be the difference between what you had for net assets with restrictions and net assets without restrictions. So if you increased net assets with donor restrictions, you would debit net assets without donor restrictions and credit net assets with donor restrictions. Simple as that. Now, journal entry 3, we actually receive our pledge. So we receive the cash. So what we're going to do is we're going to debit the cash. This increases that asset. And then we need to remove the receivable. So we're decreasing the receivable asset with a credit. And then journal entry number 4, we're getting onto the statement of financial position accounts. So we are going to look at, we've got accounting fees. We pay our bookkeeper on a monthly basis, and we need to accrue those fees in a payable. So we have a debit to the expense account to increase that expense, and then we also increase the accounts payable or an accrual with a credit. Then we finally pay our bookkeeper, so we need to remove the accrual. So we have a debit to decrease that accrual, decrease the liability, and then we have a credit to decrease our asset or our cash. So these are pretty straightforward, but I think looking at these types of entries helps a lot in just identifying the entries that you generally need to make. Never make a net assets entry as part of your standard journal entries. It only needs to be part of your closing journal entries. So let's look at our statement of financial position. Now, here we've called it a balance sheet, which is basically, standard. If you haven't customized your accounting software, it's going to say balance sheet most likely instead of statement of financial position. But we all know what it is. So here we can see that everything looks good, everything balances out. So our total assets balance out with our total liabilities. And we're not going to dive into a bunch of details here, but all the balances appear to be natural balances. Then we move on and let's break it out into the debits and credits just for fun, because it makes it a little bit easier to demonstrate. So here we have our debits representing our total assets, and then our credits representing our liabilities and net assets. And it makes it just a little bit easier to see that everything cancels each other out. Everything is in the correct column. And if you're really having a hard time understanding the financial statements and analyzing them, I recommend you do something like this just to kind of start to get a handle on it. Now, what if we have this? What if we have $625 debit showing here in accounts payable? Well, obviously in the 2-column system, we can easily see that that's not correct. That doesn't match the rest of the liabilities and the net assets. We're generally not going to be presented with things this way. So instead, we are going to have a negative balance. And this negative balance indicates that it is an unnatural balance, because in the financial statements, everything is assumed to be a natural balance unless it is a negative or an opposite sign. So there might be multiple reasons for this, but we're going to need to dig down and figure that out. And that's why we want to know what our natural account balances are. If we're, say, in management, we want to be able to look at that and say, wait, that is wrong. Let's take a look at this. And what we might find is maybe there was a manual entry, so we double booked a payment. Or maybe we overpaid. So maybe we actually overpaid an invoice, and that means that we have a refund coming, or we have a credit coming on a later invoice. So what do? Well, we don't necessarily want to change it in our accounting system, because that might mess up our credits when we get that next invoice. So on the financial statements, we would want to show this negative 625, or the amount of the invoice that was actually overpaid, that overpayment amount included in accounts receivable, and that would take care of the accounts payable problem we have here. So then let's move on to the statement of activities. So again, with the statement of activities, we kind of have the opposite setup. So on the top, we have our revenues, and our revenues are going to be shown as credits, and then we've got our expenses below that, and those are going to be shown as debits. And when you think about the entries we made, this makes sense, right? We receive some cash or a receivable, we're going to record some revenue. And we receive a bill, or we accrue an expense, we have the opposite here. So just keep that in mind. And if you think about it as a whole, I think it makes it a whole lot easier to recognize. Now then, what if we have something like this? Now, again, we're not going to see things in a double column in the financial statements. This is just for ease of explanation, and something that I recommend you again do if you are having a hard time recognizing natural account balances. And we can easily see that in the credit column we have this $2,000 for an expense, and when we show that in a single column, it's going to show as a negative expense. Now, obviously, we don't generally have a negative expense. That means we had some sort of revenue. So what could this be? Again, we would want to dig into this and see. Maybe we received some sort of a refund, and that refund had no expense to go after because we'd already closed our books, so we couldn't credit that expense, so we ended up with a negative balance in the fundraising expense. So what we might want to do is, this fundraising is obviously going to be made of multiple transactions. It could be even multiple natural accounts. So what we might want to do is find that expense. And for that, for presentation to our board, what we might do is break it out. And break it out into something like an other income, and make a note of it. Say, this is because we received a refund, and we don't generally receive refunds, but the work wasn't up to par, or they didn't complete the job, something like that, just to show it. Or if we're going to present it like this, we need to make a note of it, and maybe even note what the balance would be without that refund, so that it's easier for them to compare this with the prior periods and the succeeding periods. So in summary, debits and credits are the basis of double entry accounting, and it can be easier to break things out into ledger form to see if they balance. So when you're looking at financials, when you're looking at an entry, it might be easier just to break it out instead of using a single column with positives and negatives to be able to tell what is going on. And if you're starting to get confused, just work from the basics. Break out that entry into multiple entries. Sometimes we try and consolidate large entries, a large amount of information into a single entry. And sometimes it might just be easier if we've got a huge entry, make multiple entries. It might take a couple extra minutes, but it could prevent you from making a mistake. And then finally, just check the account balances to see that they're natural. And it's an easy way to identify errors and cut down on any confusion, cut down on excessive questions because, hey, I've already identified this, I've already made a note about it, and I've communicated it to management so they know. Instead of having to go back and forth, well, what is this? Well, I don't know. Let me dig into it. No, just identify it because that those are gonna be the things that cause us to pose questions. So just do it. Anyway, I hope you enjoyed this and stay tuned for more videos on the fundamentals of accounting.